It's time for the big picture. Let's welcome in the team from Charles Schwab. Very pleased to say we've got Kathy Jones, Chief Fixed Income Strategist, Schwab Centre for Financial Research, and Nathan Peterson, Director of Derivatives Analysis, Schwab Centre for Financial Research. Very good morning to you both. Thank you so much for joining me this Monday. Kathy, let's start with you. Obviously a bit of a consequential week as far as what these Fed speakers are going to say about what happened in that meeting. What are you listening out for?
Well, I think there's a lot of Fed speakers, so let's start with that. I think there's some like 18 speeches or something. But I think the interesting thing will be among the voters, will there be a pushback on expectations for two more rate cuts this year? Now, we just heard Raphael Bostic from the Atlanta Fed speak, and he pushed back on that and said he's only penciling in one more rate cut this year. And given the distribution on the dot plot, I think that we might hear more about that. On the other hand, a couple of interesting speeches. We'll hear from Stephen Mirren, who newly appointed to the Fed, who is dissented in favor of more rate cuts, and presumably is the one who's looking for 125 basis points this year. It'd be interesting to hear what he has to say on the other side of the coin. And then we'll have Fed Chair Powell, who will probably reiterate that he's somewhere in the middle on all this. But I think we'll get a better sense of the balance at the Fed going forward and what's really important in terms of driving their decisions.
We've already heard from Muslim this morning saying there's perhaps limited room for more interest rate cuts, suggesting that they should approach with caution now. I'm just wondering, Nate, when you look at some of the commentary that has already come through, what you make of sort of the market reaction and how we're positioned this morning ahead of a lot of this commentary that we'll be getting this week.
Well, I mean, we did have triple witching last week on Friday there. And, post the FOMC meeting, the market just basically, did the glass half full that, hey, don't fight the Fed and don't fight the trend and, continue to push mainly tech stocks higher. If you look at some of the performance and the likes of, the nuclear power generators and the quantum computing stocks, I mean, just some really parabolic moves there last week. We are a little bit stretched on the RSIs here. 72-ish is where we closed on the S&P 500, 74, 75-ish on the NASDAQ composite. If we were to get some kind of a pullback, 2% down to the 20 SMA on the S&P 500, for example, that would just be pretty normal. But this week, I think, of course, the Fed speak is going to be important. And then let's just see how bond yields react if they do when we get, that commentary. Outside of that, we have Micron that's reporting tomorrow after the bell. I mean, that stock was up 30% plus in September alone. So it's one of those stocks that kind of fits into that AI secular growth story. And depending on what happens there in terms of their guide and how the stock reacts post-earnings, that could, guide sentiment for the week. And then, of course, we have PCE later at the end of this week. But, I'm just watching the price action today. Futures down, the market opens down, and then we're already seeing some of the dip buyers come in on the tech side. So I continue to watch that price action. Are the dip buyers still coming in on any kind of pullback? Or are we going to see some sell on the good news at some point over the next couple of weeks? We still haven't seen that.
Yeah, that certainly has been supportive of what continues to push us to these record highs almost daily, it feels like, doesn't it, at the moment? Okay, you highlighted some, important catalysts on the horizon this week with some of the earnings, also the macro side of things. Kathy, I was just having a conversation with my previous guest, Tim, who was also keeping an eye on, what is happening down in DC at the moment. There was a lot of conversations and confusion, you could say, somewhat around the H-1B visa situation over the weekend, how much of an impact that's going to have on, certain companies, certain sectors, as far as policy is concerned, also with the looming government potential for a shutdown, watching that September 30 deadline as well. What are you watching and what is going to be the impact, certainly on these markets, do you feel?
The two things we're watching will be the Supreme Court decision on tariffs and the budget. And, it's always difficult with these threats of the government shutdown to know how seriously to take them. And I think the market's shrugging that off right now and saying, oh, well, they always talk about it, but if push comes to shove, they'll come to some sort of a deal and not shut down the government. But it does have implications for the economy, for markets, and we have to keep an eye on it. This time, it's certainly very contentious in terms of the two sides on this budget. So got to keep an eye on that. That being said, the last time we actually had a government shutdown, Treasuries rallied. So you have to be careful what bet you place on dysfunction in Washington.
Yeah, and obviously, if we do see any sort of rally, but depending on how big of that one that is, what that implication could be then for equities as well. But guys, we're going to have to wrap it up there. Thank you so much for joining me. Kathy Jones, Chief Fixed Income Strategist, Schwab Center for Financial Research, and Nathan Peterson, Director of Derivatives Analysis, Schwab Center for Financial Research.